What we're seeing Bitcoin do right now is something that we've actually seen happen twice already within this trend very clearly, and it potentially hints at Bitcoin rising up very, very nicely from here. So I want to explore the possibilities for you for the upside and the downside, and kind of tell you what I think we're seeing and what we might see next. Of course, this is going to be a super, super important one. If you're excited for it, if you're looking forward to what I'm going to be talking about in this video, and you're just kind of looking forward to learning a little bit, do me a favor and smash up the likes. And let's get straight into it. The main thing that I'm seeing Bitcoin do right now is, again, kind of possibly form one of these patterns. We can actually see it quite clearly on the daily time frame, where we move up very quickly and then we keep moving up a little bit slower. And this is, again, it's a very typical, I like to draw it out a little bit like this, and then, our next move looking a little bit like this, and then our next move after that looking a little bit more like this. So you kind of have the same thing happening on either side of a, consolidation zone that looks, just like more upward price action, but slower, which is exactly what we're in right now. The reason that this is interesting is, there's a few reasons, and the obvious one is that we've already done this before, and so I'm not going to talk about that right now. I'll come back to that in a few minutes, but one of the key things that I think is really, quite important and worth considering is, in my opinion, we've already broke two of the most important resistance areas on this chart. The first one was this box right here, because we used this box as really reliable support over the second half of last year. And the second one was breaking above this high that we set right at the point of the FTX drama. The reason that I think these two resistance areas were very important, much more important than this one, is because we used this area for a really long time. We used it many times. Comparatively, this area, we didn't really interact with it much throughout this particular cycle in the market. We interacted with it for a total of 22 days. And if you want to stretch it up to where we dropped below, okay, closer to maybe 33. Over here, though, we interacted with it about, 4 months. So much longer interactions that we had with this price level. And again, you can just kind of see the amount of times that we came down to use this as support, just in terms of more macro hits. Very, very frequent that we tested it. Over here, we found resistance once and twice. That's it. If we look at these kind of more macro timescales. And if we zoom in even more, and we just kind of look at individual times that we came down to, say, the bottom of this range and then bounced up, and then came down to the bottom of the range and bounced up, and then again and bounced up, and then again and bounced up. Or if we look at the resistance hits that we got right here, there is a lot going on with this price level, right? And these are the kind of things that build price areas up to be difficult to break. That's why when we reached up here before, back in December, we couldn't break it, and we had to go down and try again much later on, like literally, what was it, like close to a month afterwards, right? Yeah, literally a month afterwards that we had to come back up for our next attempt at breaking that level. And I don't think that's a coincidence. I think that this is quite natural to happen, where you have, really strong resistance areas posing to be, fairly significant problems. Kind of the same thing for this deal right here. We had this resistance that was a pre-FTX high, and it also represents a more kind of macro high in the market. When we're looking at market structure, one of the things we analyze is, just are we setting higher highs and higher lows? And, the opposite would be in a bear market, are we setting lower highs and lower lows, right? And so the fact that we set this high over here, if I just kind of replay the chart back to something like this, for example, it's pretty clear that this is a very significant high in the market. It's basically the last real high before the huge collapse happened, and the market really struggled to get back up to this level. I mean, at this point alone, it was literally multiple months that Bitcoin couldn't get back up to this high. And so to be able to reclaim a level like this then is actually quite significant, in my opinion. It really signifies, a good amount of strength, and that's why I think that, it wasn't particularly surprising that we topped out over here. And this is what makes what we're in. What am I doing? This is what makes what we're in very significant, because if we go back to where we are right now with our current phase in the market, you can't really say that, in my opinion, about our current resistance zone, right? It's just not that bad compared to what we had over here. And in my opinion, this one's a little bit more open to interpretation, but even compared to this area, I feel like this resistance zone is not as strong as what was here or what was here. And the fact that we've already broken them is potentially an indication that it shouldn't be too hard to rise significantly higher above those levels. And that, I think, is definitely something that's worth highlighting and keeping in mind. Now, before I continue this, I want to make a really cool announcement. For those of you that are interested, I'm running a giveaway where one of you guys are going to be getting $1,000, and all you have to do is open up a Bybit account using my link in the description down below. Get yourself up to $30,000 in rewards. That's not compulsory, but what you do have to do to enter this is simply make a deposit. Just make a deposit of at least $1. That's it, just $1. And whether you use that or not, whether you withdraw it or not, is completely up to you. But make that deposit. Keep the cash in the account for a little bit because I'm going to be checking. And this is going to be at random. One of you is going to get $1,000 in bonuses. It's just not in bonuses, just straight cash. I'm just going to send it to you in Bitcoin or USDT or whatever. So if that's something that you think you'd be interested in, go ahead and check it out. And guys, while you're there, they are giving you up to $30,000. Another advertising 𝐲𝗩, but I spoke to them on the phone. It is literally $30,000 in bonuses that they're giving you guys if you follow my link in the description down below and then head on over to the rewards hub. And depending on your balance that you deposit, depending on what you trade, you're going to be getting huge cash bonuses. So that's really much, very much worth taking a look at. And if you just want to enter this kind of draw, all you got to do is make that deposit. I'm going to be picking someone at random, and then the email address that you use to sign up to Bybit is probably how we'll be reaching out to you. Most likely, you're going to find more information on it down in the description below. But let's come back to the charts here. Very interesting indeed. And I think what even strengthens this is if you look at what happened over here, and if you look at what happened over here, we're forming another thing which is quite interesting. And like I said, this is what the market has repeated already within this trend. I think it's worth staying on this topic just for a minute longer, though, to really, make it very clear that I just don't see that this area of resistance is as strong as, for example, this, and potentially even as much as this. But, I mean, we broke these resistance levels fairly easily. I mean, this one took a long time of consolidation and even, a long time underwater. But when we finally hit it, we kind of blasted through it pretty quickly. And this resistance right here, even though it was, lighter, we did actually struggle at it a little bit more. But really not that long. I mean, from the day that we hit it to the day that we broke out was less than a week. It was still pretty quick that we were able to get over it. And you can see right now that we're, still kind of edging higher from the day that we got here to where we are right now. It's been 7-8 days. We're still kind of edging higher. I think we're doing pretty good. And if you zoom into what happened here, you'll see that that was the same deal. Take a look at this, guys. If I move this on over to the 4-hour time frame, you can see that we were actually kind of trending upwards with this market structure right here, right? I mean, more or less, with this exception. And actually, if I draw another parallel channel, it looks a little bit like this. This one's even more obvious, right? And unfortunately, we broke out of this one, not in the good way. We broke out to the downside. But I think it's pretty clear that this would have moved up. We just needed to grab a little bit of liquidity, right? So, to me, the real chart pattern was this, but then this was a deviation before the move could actually happen, which is incredibly common. We had a deviation down here and we had a deviation up here. We form deviations all the time. Sometimes they take a little bit longer, like right here, and sometimes they're pretty quick, like right here. But in any case, this was the chart pattern. And if we zoom in a touch further and we take a look at this on the 1-hour time frame, we can actually see that this happened again over here. And I spoke to you about both of these. I don't actually remember. No, I might not have spoken to you about this one. Pretty sure I did. Most likely I did, let's be honest, because I always talk about these. We were forming something similar right here, where we managed to trend up pretty nicely, pretty quickly, and then just kind of slowly continue to rise up, doing something very similar, and then bam, we get our breakout. Really nice breakout. I think it's worth noting, by the way, look at the volume. There wasn't really a whole lot of volume on this move, right? I mean, the big breakout happens on this candle, and there's basically no volume. It really doesn't peak up very much. It's only much later that we start getting much more significant volume, and even later than that we get, very impressive volume. And I think that's just an interesting thing to keep in mind, because a lot of people look at volume, including me, but, you really have to understand that it's not a reliable indicator a lot of the time, because if you thought that, there's no real volume here, you would have not potentially entered the market down here at, $17,000, $18,000, and now we're sitting at 23, which may or may not sound like a lot to you, but just to put it in perspective, that is a 30% increase. So 10K would have turned into 13, for example. Really quite significant gain, I would say. And again, the thing is we had two of the same chart patterns. Whether you look at the smaller one here or the wider one here, the point is still the same. We are overall setting higher highs and overall setting higher lows within these chart patterns. And then bam, we're getting our breakout. And you can see it again, like I said, very clearly on this time frame as well. I think even the 1 hour makes it a little bit more obvious, if we just kind of take a slightly more zoomed out look at this, it does still look fairly clear overall that we are kind of trending up, right? Something a little bit like that. It's not as clear. This, you could definitely say, is also a sideways range, and that would make a lot of sense. And actually, if that is what you're seeing, then we're actually in the resistance right now, which is also a really good sign, right? Because if you're in resistance but you're not getting sent down, well, that's telling you that the market is only taking a time-based correction, right? Because the market will only give you two types of correction. Number one, you're going to get a price-based correction. So that's basically, right here, for example, I'll give you a really, really good example. We rallied up to our resistance level and we got a price-based correction followed by a time-based correction. These are the worst. The worst ones are where you get both of them. Sometimes you just get a price-based correction. So see, like right here, we dropped down very hard. And then we got a price-based correction. It happened very quickly. It wasn't really very time-dependent. The trend was down. We corrected upwards. This was our correction, right? We see these a lot. We see just time-based corrections and we see just price-based corrections. And sometimes we see both. An example of both is kind of what we're in right now. Kind of this right here. Kind of this, although less so. This one didn't really have a correction. I guess a great example of a time-based one is what happens right here. Bam, look at this. Up, dead, just flat, 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 and then up again. So that's more of a time-based correction. Again, I like what we're doing here because the fact that we're not getting rejected out of this resistance level tells me that we're still in one of those situations where bulls are quite optimistic to keep buying. If bulls are buying, they feel like they're getting a good deal, right? Otherwise, you wouldn't buy if you think, the asset is immediately or in the long term, either or both, going to be dropping, right? People buy when they are optimistic about the future price. This is showing them, and this is the thing, a lot of people don't get this, and I talk about this a lot on this YouTube channel, is that trading is not a study of math or, charts necessarily. It's much more in my head, in my mind, it's much more a study of psychology. If you're looking at this, you're looking at psychology, nothing else. Because really, if we're seeing the price, move up, but then not have these price-based corrections, that's showing us that every time we hit these lows, guess who's stepping in, right? Buyers are stepping in, and guess who's stepping off? Bears. They feel like they can get a better price, and so they're choosing not to sell. That's why we overall kind of have these movements upwards. And like I said, when you consider that next to, what is, in my opinion, potentially a fact that we just don't really have particularly strong resistance in this area, it starts to paint a really, quite convincing image, which I like. The downside to this is we've moved up a lot without a price-based correction. Take a shot every time I say correction, legends. We've been up by 45% really within just under a month, and that's quite a lot, and it's also quite fast. It's not super often that you're going to continue to make next legs up, and if you kind of look at how high the next leg might be, I think it's quite reasonable to say that you could measure it from the bottom of the move to the top, which also kind of roughly fits the previous move. And if we do something like that now, that does potentially put us quite high up towards $25,000. The other way to measure it would be simply from the breakout point. So if we take it from this breakout point up to the high that we set, and then saying, that our next breakout point could be somewhere like up here. Again, it paints a similar image. We are, with a lot of different signs, I would say, we are looking at reaching that 25K area. And I think that's what could actually be more of a problem for Bitcoin. It doesn't actually have a lot of time-based interaction with the resistance level, but it has a very significant price-based interaction, right? This price-based interaction literally reversed the market. We rallied up and it stopped us from rising from 17K all the way up, and it dropped us down actually all the way down into the pits below 15, below 16, So I think that is definitely, a sign that we should be keeping in mind and staying aware of. That's something which could definitely turn into some problems. I want to take a look at some of the other support indicators that I've got right here on this chart that actually could be quite useful. The 4-hour Ichimoku cloud, because we've been trading more or less sideways, has now completely managed to catch up to where we are. Within the next day, we are going to be able to use this as support. And on the 4-hour time frame, that's really significant. For this indicator, the top line and the bottom line tend to be especially useful. What's in the middle is still useful, but it's mainly the top and bottom line that are very, very useful for the price. So if we see that we kind of rally up a little bit, fall down, grab some liquidity, then come back up, that would line up really well with where we have some, I would say, quite significant support. And I like that. I like what I'm seeing there. If we take a look at where the momentum is on this same time frame, we have a lot of momentum. This is very much going in Bitcoin's favor right now. We are going to start losing it if we don't do anything over the next, I'd say, week. But where we are right now, we're still good. We're still in a really, really good place. And if we take a look at the daily EMA ribbon, it's looking okay over there as well. I was telling you guys that if we fall down, I am going to be expecting support down here between 21.3 to 21.6. And we're starting to see that our daily EMA ribbon is also lining up with that level. Not only that, but the 200-day EMA as well. That's quite a significant line, if you ask me. Definitely something that I think is worth paying attention to. If we look at the daily moving averages as well, just the moving averages, not the EMAs, we're gonna get a golden cross in a little bit. Where our 50-day moving average crosses above our 200-day moving average. So we're getting really nice bullish developments here. We're getting the right things coming up on our radar, and I really like that. One sec. And I really like that, and I think that potentially indicates that we could be looking at some real confirmations that this thing could stay bullish. Again, potentially meaning that if we pull back, it wouldn't even necessarily be a bad thing, but also that we have, I think, pretty decent chances at just continuing to fly up from here, given that our resistance hasn't been able to put a huge fight up against Bitcoin yet. So a little bit of a higher rally would certainly make sense. Let's take a look at the fear and greed index. Let's see what ads I've got today as well. Always very interesting. I'm curious now as well. Okay, so I can claim my fucking soul name now. That's my ad for today, legends. I have no idea where these are coming from, obviously, but yeah, look at this. We are starting to enter greed. We have been slowly peaking up. That's not good. I think that's fairly safe to say. I don't like that as a sign. That's definitely a little bit concerning. Let's see where the long and shorts are as well, with the long-short ratio. They did balance out. Previously, we had more shorts than longs, and then they started to balance out, and that's when, no coincidence, the trend started to level out. Now we have more longs than shorts, so I think that does potentially indicate that we could be ready for a little bit of a pullback, just to give traders in the space a reality check. This isn't going to be perfect. Yes, your ex is coming back, and yes, she is not as pure as she once was. This is your reality check, legends. The analogies are, you know the deal. This is what you come for. It's bitter. It's bittersweet in a sense. It's probably not going to work out. And that's why I've been saying that I think we're potentially in a bull trap. So far, we really are showing the signs of being in a bull trap, even though we're getting really good signs like potential golden crosses coming. We are, because we're moving up so quickly, because the fucking fear and greed. I mean, this says everything. This is so typical, guys. This is so typical of what happens in a bear market rally. In fact, let me just show you what happened in the last significant bear market rally we had, right? So for that, I have to show you the last bear market and the last bear market rally. So the last bear market was obviously between 20K to this low right here, because that's when we kind of really kicked off. And if you look at what our bear market rallies looked like, obviously the main one was up here. I want to focus on 2 points. I want to focus on what happened on the initial crash, either here or here. And after this rally, I want to focus on what happened here, or just like this whole area. So let's start with this one. I think this one will be interesting. Basically, we're looking at the 1st of May, 2018. Let's go back and see if this data actually stretches that far back. 1st of May, 2018. And what are we looking at? We're looking at readings of 63. Okay, so yeah, that definitely proves it. So yeah, 50s and 60s, which is exactly where we are right now. Exactly where we are right now. That's the reading that we had up here. Up here, we had an even stronger reading. We were up to 70s. But this is what's interesting, is because the market was very rubber banding constantly. I mean, this is just constant, just whiplash really in the market at this time. It starts to level out after the second peak and onwards, right? So that's what I want to focus your attention on. Very, very similar fear and greed numbers, and you know what happened next. Obviously the rest was history. Next one I want to look at, let's look at this peak first right here. Again, May, but of 2019, and then end of June 2019 as well. So if we look at May of 2019, that would put us right around here, mid-May. Again, we're looking at, quite similar levels, right? The high 50s, entering the 60s, pushing 70, but more or less kind of in that same range. And then when we peak at the end of July, was it? Is it the end of July that we peaked? End of June, sorry. We peak, I'm guessing, right here. Yeah, at the end of June, we start hitting really high numbers. So to be fair, we could probably have space for this during our current rally, and I certainly think that that's possible. But I wouldn't be surprised if this thing has to reset a little bit before we actually come back for another rally to the upside. It does look like it is a little bit too high, and according to what I've shown you, we are quite clearly also in bear market territory. And I think one of the important things to make sure that we're keeping in mind and retaining perspective of is that we are still in pretty bad conditions in a macroeconomic sense. We're gonna, what forms, what do you call them? Disbelief rallies. What forms rallies that just don't work out within bear markets is optimism that we might actually be coming out of the bear market, right? And so people are trying to be the first in, trying to be the ones that get a good entry on a market that potentially reverses quite significantly. One of the reasons I think that we're potentially in a bear market still, and that we're going to find a bear trap, is because I met up by sheer coincidence with a friend of mine who's also a YouTuber, and he is he's a nice guy, but as a trader, as an analyst, yeah. But I still love the guy, and he's quite firm that we're that we're potentially in a bull market, and actually disagreed with me quite firmly, and it's exactly that kind of person that if they get excited, and I'm talking about the people that just are very easy to become bullish. I mean, the people that are bullish pretty much all the time. Bullish as a fucking personality trait. Those kind of people, when they start believing rallies like this, to me it doesn't. The market needs to break people like that. Is my point. And I know that I said something a little bit different last video, right? The last video was saying, well, how much do we actually need to do? What I'm not saying is that we potentially set new lows. And a lot of people are saying that, and I feel like that's also a little bit too much fear porn. I don't necessarily think that we're going to do something like this and then come back down for new lows. We certainly could, and you know what? That would make a lot of sense if we did. But as it stands right now, I'm seeing something potentially a little bit like this, some sort of big correction like that before, let's be honest, guys, it could end up being something like this, like some bullshit, super plausible for Bitcoin, right? Like you kind of range up really, really high and then bam, then we get something bad. And the worst part about all of this is, according to the time frame that I've just shown you, it could take 400 days, right? That's what Bitcoin would do, if anything, in my opinion. It's not like it's going to be straight line up and then straight line down and then bull market forever, because that just doesn't happen, right? I mean, it can't be that interesting. It has to be more boring than that. So that's kind of my take there. But nonetheless, just from what I'm seeing in a short-term perspective, it does look pretty good, and I like what I'm seeing. I'm actually fairly confident with what I'm seeing, to be honest, guys. I think it's a good setup. I think it's in a good place, and I think it certainly could continue to rally up more from here, especially given that we have been in this zone now for a little bit of time, right? I mean, it has been 6 days. The last one itself was a very similar time frame. And we're still not getting sent back down, so maybe we get a little bit of a liquidity grab and then move up. Sure, that would be completely fine, but I certainly think that we're looking good. And even if we do pull back, there's so much support that we could fall into now that I'm actually really not that worried about the market, to be honest with you guys, at least for this short-term perspective. Daily Ichimoku cloud still far away, and still both in terms of price and time, it's still very low, and it's basically just towards the end of February that we can even start seeing it really develop. So, and it's not even really developed yet anyway, so I think this is going to take a little bit more time, but it is still interesting to see nonetheless how this is continuing to move forward. Obviously the main thing that's interesting is going to be the moving averages on time frames like this, and also, like I said, the 4 hour. So that's what I'm looking at. Those are the kind of things that I'm keeping my eye out for. I have to reaffirm that within all of this, things like sentiment are showing me that this is still quite likely to be a bear market overall. So obviously I'm going to be looking at it from that perspective. Yes, if it's going up, I'll make money. I'm not allergic to making money. But I am going to be, keenly watching to see, how we respond to resistance levels, perhaps expecting that we might deviate above resistance levels and then drop back down. those kind of things that are quite common for Bitcoin. So that's what I'm watching. And if that stuff sounds interesting to you, then you can go ahead and take a look at that as well. I want to remind you that there is that $1,000 giveaway. All you have to do is sign up to Bybit using my link in the description down below, and then make a deposit of $1. That's it, just a $1 deposit. And obviously you can make more. The more you make, the more bonuses you get, up to $30,000. Just head on up here and then to the rewards hub. You can also do this on your smartphone if you download the app, but you need to sign up using my link first, which you can't do on the app. So I think if you're on your phone, you can just tap the link and it'll let you register in your web portal. This applies to everyone in the world, whether you use a VPN to access Bybit or not, stuff like that. You stand to get this, and I'll just send you the money myself. So anybody can enter. Well worth checking out if that's something that you're interested in. And of course, if you want to get all the free cash that they're offering, well, there is 30K up for grabs as well, which is well worth checking out. I want to remind you guys about Prime XBT as well. I've now actually got 2 trades planned, which I am about to share in VIP, if not already shared. I can't remember. And no, I haven't shared it in VIP yet. 2 trades that I'm about to share inside of VIP that apply to this market, to these markets, these indices, commodities, and so on. I'm not going to talk about them right now, but if that's something that you want to see, then these are the steps to join 𝗤𝗏FLY's VIP. And of course, if it's something that you're interested in taking a look at, Prime XBT is an amazing platform, and obviously with any crypto exchange, it's better to have your account set up and funded now rather than when you actually want to trade, because when you want to trade, you're then going to have to make a Bitcoin deposit, which is still very fast, but it is an unnecessary barrier to entry, which you could eliminate. And it's a really, really good exchange, so it's well worth checking out. They are going to be giving you up to $7,000 in bonuses. So Bybit and Prime XBT together, giving you close to $40,000 potentially in bonuses, which is absolutely amazing. And again, the really cool thing with Prime XBT is that their bonuses go up to $7,000, and that is just anything you deposit, you get 7% back as a deposit bonus. So super, super cool offer. I really hope you've enjoyed this one. You know what to do if you have. Bam, these are the steps on screen to join 𝗤𝗏FLY's VIP. Hit up the likes, subscribe, tick the bell, do all that good stuff, and I'll see you all in the next one. Cheers.